And we are going to talk about contrarian takes on the market. I think today we talked a lot about specific things that are relevant for a very small part of the world. Like crypto is still very small right now. So I would like to switch the gears and talk about something probably a bit more impactful and AI specifically. So guys, I think you know that last week O1 was released. This is a new ChatGPT model, which is a reasoner model, and it's pretty incredible. And when I think about this, I believe that probably most of the crypto that we do right now is not really relevant for this new world where we have an AGI and all this like incredible models. So this is my contrarian take. Would you agree that most of the crypto right now is not relevant for post-AGI? Yes or no, and why?
I think that I think crypto, the way it is today, is the foundational layer for what AGI will use as their payment rails. It's like the perfect sort of payment rails for AGI to like use to kind of transact in the open economy because everything is open source. You don't really need to KYC to onboard, and like AGI are like the perfect entities to sort of transact using crypto and like do work in the open economy.
Yeah. Specifically for AGI, I mean, there's a lot of problems with crypto just in general, like Web3 AI right now that we could kind of like, nitpick on. But I do think specifically as like AGI or this AI gets really good, cryptography, not crypto as it is right now, is going to be very important. I think this is like very pertinent for a lot of the ZK stuff and the FHE stuff that are getting like deep funding right now. They're not there yet, and it's going to take like 5 to 7 years before. But as deep fakes and stuff get much scarier, especially when AGI is there. I think it's going to be pertinent for like ZK basically to be on every hardware device. There's going to be fundamentally, I think cryptography is going to be a very like honestly need in every hardware device across the world. And so therefore, I think that's kind of where crypto will play a part specifically, and it has to play a part. And yeah, I mean, it's far along in the future, but I think as AI gets scarier and scarier, actually crypto's need becomes more and more, whether it be payments, doing ZK TLS on data authenticity and all of that stuff. So I think it only actually helps our case specifically. And that's why like Sam Altman, he's on AI, but he also does a lot of Web3 stuff because all human identity, DID, all of these things become right now, it's like kind of like if you're looking at the VC terms, right? There's like it's not a hair on fire problem that everyone needs to get their eyeball scanned, but like when it actually becomes a problem because you literally can't tell the difference between two pictures of fake and reality, that's when it really matters of who got their eyeball scanned, right? So I guess like that's would be my case specifically of like how crypto kind of related to the AI stuff.
I just wanted to add, like also when it comes to smart contract vulnerabilities, and DApp security the way it is today, is gonna be much more just a pertinent problem. Like any smart contract vulnerability with AI is gonna be like absolutely exploited right away. So I think it's gonna be also an arms race between automated AI auditors as well as the agents that would be actively looking to attack either like code vulnerabilities or economic vulnerabilities that is only present when you're launching your DApp into like the open, composable DeFi ecosystem.
Okay, so it sounds like you both answer yes, right? What are the teams or startups that you're most excited about that built at the intersection of crypto and AI?
Obviously my portfolio companies, but no. I mean, just in general, I think like, and I kind of alluded to my answer. It's really like nothing here right now would touch what you're saying, like traditional AI right now. Like right now, we're at the place where people are building ZK, like data providence stuff. People are building, just general purpose ZK programming languages, and it's a lot of open source stuff, and they need to get better, to be honest with you, to become practical. And so those are the types of companies. So I mean, there's obviously Succinct, Nexus. I'm gonna throw Nexus in there, portfolio company, obviously. But all of these people who are like the fathers of like ZK Snarks, just the ZK Starks, FHE stuff that's happening. There's like a lot of people who are the top professors in this field that are creating crypto companies. Those are the types of companies that in the end I think are going to succeed when AI becomes a problem, and they already are. Like they're talking to Perplexity and the big AI companies because all of them are thinking about, TEEs are right now like best practice specifically for AI, but like soon they're going to need ZK. They need FHE, and obviously a lot more progress needs to be done in these fields. But the top minds are working, and they're working in Web3. So those are the types of things that kind of excite me in this field.
And then on my side, I think because I spoke about developer tools this morning, like AI-powered auditing tools are really exciting. I think we're at a point now where, like manual audits aren't enough and static analysis tools aren't enough. We made an investment into a fuzzing infrastructure later last year. And so I think auditing tools powered by AI that consistently kind of like get smarter as the contracts are deployed and are live in the wild. Consistently kind of like protecting users' assets is exciting to me. And then on the consumer side, I think the intersection between AI and crypto art, decentralized autonomous artists are really interesting. Botto is an example of an on-chain agent powered by an LLM, and it learns from community governance, like basically voting on artwork that it auctions off every week. This is something more like funner for like on the consumer side, and it's been generating revenue for the past 3 years every week.
Amazing. Thank you for sharing those examples. If we go back to some other contrarian takes, so what are the assumptions that we hold in the space that you most disagree with, like some popular assumptions?
Okay, Celestial's left. Okay, no. So one thing that I'm gonna hint to, this wink wink, is like basically like fees don't matter. I mean, there's like a very common assumption here that like traction, you can get traction by any means, and like token price really doesn't like tie to fundamentals. Something that I think a big reckoning is gonna happen, and it's gonna happen faster than people think, is that where the yield is actually coming from, especially with all this restaking stuff that's gonna be coming around. Real yield, and that is like cash flow positive businesses, people thinking about business models, specifically like generalizable. A lot of people like, and don't get me wrong, there's a bunch of portfolio companies of ours that don't really care about generating fees or actually like providing a utility that people would pay for. That's not really in the mind. It's really about like, okay, what exchanges can I get listed on specifically so that liquidity is there, so that the token price goes up. So my contrarian take is that cash flow is going to be important. People need to start thinking about business models specifically and trying to get sustainable revenue so that real yield is actually possible. And I think that's going to move, like fundamentally get crypto to the next stage where institutional investors are going to look to crypto specifically for actual yield, not just made up yield of inflationary tokens. So yeah, I guess that's a more contrarian take, specifically because some of the biggest projects right now, obviously, they don't make that many fees. Like it's like a lot of traction, a lot of like ecosystem dog food, other ecosystems. And don't get me wrong, that's like a very good way to bootstrap things, but fees are not, not necessarily paid attention to because token price seems to be not indicative of fees right now. And so I think that's gonna happen faster than people think, and that those are the real projects that are gonna win in the long term. So yeah, I'm looking for projects that are focusing on that.
That's an interesting one. Raise your hand if you agree with that. Oh, that's great. Half of the room. Amazing. Nature, what are you?
I think the space talks a lot about the lack of adoption of crypto, and I think we're dismissing the types of adoption that we would consider as like more boring, right? So for example, the penetration of crypto in emerging countries is actually like much higher than it is in the West. Like Tron has reached product market fit in emerging countries like Nigeria and Indonesia and all these places where people want access to the dollar. So the actually 40 to 50% of the USDT supply is actually on Tron, and it's actually these merchants, doing peer-to-peer payments using USDT, and no one's really talking about that when it comes to DeFi protocols and like dApps and things like that. And it's because these users actually don't really know that they're on Tron, and like they don't have this concept of like blockchain and the fact that their USDT is a TRC20 and not an ERC20, and they're just like using it, right? And so like that's also the addressable market for people who might be like target users to like earn yield as well. But instead we're sort of like targeting the same sort of crypto native EVM / like Solana centric like user base here. But in terms of like expanding the pie for potential users, I think we were at a really good time now to onboard the new just new demographics of users with things like embedded wallets and people who won't like be downloading seed phrases and MetaMask and things like that.
That's amazing. Anybody agrees with that? Also raise your hand. Okay, quite a few people. Thank you. Great. So apart from what we just discussed, what are the other emerging trends that you think other VCs are ignoring right now, and why?
Okay. I mean, so I cover a lot of the DeFi and infrastructure for Pantera. So obviously, I'm kind of biased on like what I see and what I think people are ignoring. One thing that I feel like people are ignoring is indexing, like data indexing specifically. I think it's not a sexy business, to be very frank with you. But Monad and Celestia were talking right here before us, and a lot of high throughput chains basically are like kind of the next wave of kind of crypto for last mega ETH. There's like so many high throughput chains if we want to talk about it. But like indexing has been a hard problem. And the graph, to be honest with you, no one maintains. Subgraphs, all of this stuff, it's kind of like very old tech that the graph just exists, but really it doesn't do much because people don't maintain it. And indexing is just as more and more data just basically comes to the blockchain industry, and AI is being built on top of blockchains. If we want to use this for payments, we want receipts for payments, like all of these things need to be categorized. All of these things, we need to have like good indexing technology specifically. It's a must have, and it's core infra that actually like generates a lot of revenue. They're like companies there, they're generating revenue, but because token economics are not, that great, people don't like to invest in it. So there are a lot of projects that are like, I think that are interesting in this space that like VCs are not funding specifically. So that's one thing that I would say it's like kind of underlooked just because token economics have not been great for a very long time in that very specific vertical. But I think is something that needs to be looked at. So that's one. I have others, but I'll let you guys.
Yeah, I would agree. Like we as a space focused a lot on scaling blockchain writes and not blockchain reads. And as we, like we're in this multi-chain world now and like talking about like multi-chain dApps, it's really hard for these dApps to actually like be performant and have things like real-time activity feeds because they're stuck with these opinionated APIs and they're having to like rely on the providers to expose the endpoints that their dApp needs, right, to read from the blockchain. So I think, yeah, like data indexing infrastructure, streaming infrastructure is a big one. I think there's been like a huge proliferation and then like subsequent consolidation in the wallet market. Like everyone at some point was building like wallet applications, and like historically they've made money like through swaps, right? But now like we're looking at wallet. We've been investing a lot in wallet infrastructure and things like account abstraction infra. But now it seems like the top of funnel for users, thanks to these onboarding infra, is actually going to be dApps and not wallets. I think wallets, as we know them, like the line between like standalone wallet apps and dApps are like much more blurry. And so like looking at the actual applications and the defensible top of funnel for users is going to be key here when like we're making investments into to applications, and we don't have to rely on standalone wallet apps anymore.
Okay, thank you for sharing that. And it's interesting that you both agree on the indexing, which means that probably it's not that overlooked.
Say that, but like I've talked to a bunch of indexing teams and none of them get fundraising. Right. And like even like I talk to them now, and the valuations of these companies are like so significantly lower than market that I'm even surprised. And then when I talk to the team, it's really about token price, which is the reason why they seem to be ignored is that literally GRT seems to be the only token that worked a little bit, but like none of them get token price, which is like a really bad reason for them not to get fundraising because they're making like a very good amount of revenue, like almost close to $1 million a year, these types of companies. So yeah.
Yeah, I think the fact that there is revenue and ARR though kind of like anchors the potential token price a little bit because you're now like no longer selling a dream, but you're like anchoring it to like actual revenue. So that like they're actual sustainable businesses, right?
Yeah.
But
yeah.
But
unfortunately.
Yeah, but unfortunately it's kind of like also anchoring.
I know.
Yeah, maybe the TLDR of our conversation can be to DM Nish and Nihal if you run an indexing project. So
hey,
yeah,
looking for
that'll be fun. Okay, Moving on. So sometimes contrarian takes might be wrong, obviously, right? Could you share an example, let's say, of an investment that you passed on and that later proved to be successful?
So I've been only in Pantera for a year. So to be honest with you, I don't have like it depends what you mean successful. If you mean like token go up type of a thing, something that okay, is this being recorded? I just need to make sure like
Yes.
Okay. Well, so we have a lot of diverse opinions on the Pantera board. Like you know, 6, 7 of us. So I was one of the dissenting opinions of like the Ton investment. Like we did a very big check into Ton, specifically Pantera. It's pretty well known. In the investment committee meeting, and I got on my face because it's one of the best investments that we did specifically. So objectively speaking, from the token side, I was wrong. I think still jury's out. Obviously, there's vesting and stuff like that, but it's not like I'm trying to support Ton now. Obviously, it's a Pantera portfolio company. But I think like it for me, it's like it depends on what like your perspective specifically. Like my take was always that like you need to be very dev friendly specifically. And they're like they do it in Fund C. There's a lot of like very specific things that are very like Ton specific on the infrastructure side that I just thought was very hard for developers to kind of get around, and I didn't know like if this was going to become a thing. But obviously the consumer side of Telegram and the other people around the table and Pantera were able to kind of find like pull that thread out, which I was probably not pulling as well, which was Telegram obviously has this huge access to the users specifically, and people are going to go there, and there's so much more momentum specifically that you can build on that. And so definitely as a person who comes more on the infrastructure dev side, that's kind of like my background. There are things that I can miss specifically on that side. So I would say like that would probably be my biggest like gap that I since kind of like joining Pantera. But hey, I didn't fail that much because in the end of the day, the team were able to do the deal.
I think we underestimated how quickly the dominance of this crypto native flow of downloading a wallet and then like connecting it to the dApp will kind of fade, and now like everything seems to be like people are onboarding via embedded wallets. So like embedded wallets and key management infrastructure has really taken off on the like through this next wave of consumer dApps. So I think it's not necessarily like a missed investment, but we probably should have worked with our like portfolio companies more, who were like the dominant player in the previous cycles paradigm of this like crypto native way to interact with wallets and dApps, and prepared them for like this new user flow of embedded wallets and gas subsidies and payment abstraction and things like that.
Okay, amazing. I think we can talk about it for hours actually, but we need to start wrapping up. So my last question is to boost some optimism and a little bit of speculation. So yesterday we got 50 bips rate cut. So the question is, when bull run?
All right, yeah, no, this is not financial advice, obviously. But I mean, just in general, I mean, as a founder, you should definitely approach VCs now because a lot of them are trying to deploy all their capital to cut over to the next fund. So I expect a lot of money actually to be kind of deployed in Q4 and Q1. And if the Fed cuts, continue in this specific way, I think for a temporary, like Q4, Q1, I do see like a temporary run up happening. Now, is that sustainable? I don't know, to be very frank. I'm not an oracle. I don't even know if the temporary run up's going to happen, to be very frank with you. I just know that a lot of money is going to be deployed specifically from the fund side privately. And then, like, obviously, these cuts are happening. So, look, I think, like, you can be optimistic that things are, that at least money is going to be deployed because everyone wants to cut over to the next fund soon. But other than that, yeah, it's a toss up. I mean, look, I'm still in this industry, so I'm bullish, but yeah, it might take a little longer for the bull run.
Yeah, I think it depends on the outcome of the election as well. I think this is what people are like looking to see the outcome. If it's like a pro crypto or more like anti crypto government, that's why we're in this stall period right now. But if it comes, it would be because of like election results. I think that triggers it.
Okay, well, on this optimistic note, that's the end of the panel and the end of the abstract. Thank you for being with us, and special thanks to Nish and Nihal. Thank you, guys.